Good morning, dear children. Today we discuss the topic is chapter 2 mark. So the important accounting and conventions. So important accounting concepts and conventions. Okay, so first one is business entity concept. Okay, so the business entity concept, what is meant by business entity concept? Business entity concept is a separate and is distinct from the owner or own, that is. Okay, so first one is a business entity concept. Business entity concept. Business entity concept. So the concept implies that a business unit is separate and distinct. Business unit is separate. Business unit is separate and distinct from the owner. From the owner of the owners. Owner or owners. Owners. Okay. So, நம்மளுக்கு என்ன கான்செப்ட் இருக்கு? யார்ட்டையும் வந்து செப்பரேட் பண்ணிருப்பாங்க. ஓனர் அண்ட் ஓனர்ஸ் செப்பரேட் பண்ணி இருக்கிறது தான் என்ன சொல்லுவோம்? பிசினஸ் என்டிட்டி கான்செப்ட்ஸ். So, based on this concept, accounts are prepared from the point of view of the business and not from the owner's point of view. Okay, so the business is liable to the owner of the case of contributed by him or her. That's all. So the accounting concept, only the business transactions are recorded in the books of accounts. The personal transactions of owner not be recorded. Okay, so the personal transactions எல்லாம் இதுல என்ன செய்ய மாட்டாங்க? Not enter பண்ண மாட்டாங்க. Okay, so the personal transactions of the owners are not recorded. Okay, but the transactions of the business, such as capital contributed to the business or cash withdrawn from the business or personal use, will be recorded in the books of accounts. So அப்ப நமக்கு என்னெல்லாம் ரெக்கார்ட் பண்ணுவாங்க அப்படின்னு பார்த்தோம் அப்படின்னா, first வந்து cash. Okay, capital contributed. Then second one is a cash withdrawn. Then third one is a personal use. Will be recorded. Business for personal use will be recorded in the books of accounts. So it implies that the business itself has assets and owes liabilities. Okay, it implies assets, owes liabilities. That's all. Okay, amma. So அப்போ business entity concept அப்படிங்கும்போது business வேற, நம்மளுக்கு ஓனர்ன்றது வேற. So செப்பரேட் பண்றது, ஓனர்ஸ் அஃபெக்ட் பண்ற எதுவுமே நம்மளுக்கு எந்த அஃபெக்ட் பண்ணாது? பிசினஸ் அஃபெக்ட் பண்ணாது அப்படிங்கிறது. Okay, next one, money measurement concept. So second concept is a money measurement concept. Money measurement concept. Second one is a money measurement concept. This concept implies that only those transactions which can be expressed in terms of money. Okay, only expressed in terms of money. Expressed in terms of money. So it's a only money measurement concept. So the Money serves as the medium of exchange transactions expressed in money or recorded and the ruling currency of the country in the measuring of the accounting. So ruling currency of the country. Ruling currency. So the currency of the country money record பண்ணுவாங்க. Okay. So country. Ruling currency of the country. Then transactions which do not involve money will not be recorded in the books of account. So only money measurement concept மட்டும் தான் நம்ம என்ன செய்வோம் என்ட்ரி பண்ணுவோம் அப்படினு சொல்லிருக்கோம். அப்ப மணி இல்லாத கான்செப்ட் நம்ம என்ட்ரி பண்ணுவோமா அப்படினா இல்ல. Okay, is do not involve money will not be recorded. So do not involve money, do not involve money, then will not be recorded in the books of account. Okay, will not be recorded in the books of accounts. Okay, that's all. Next example என்ன சொல்லலாம் அப்படினா working conditions in a workplace, struck by employees, strike by employees, efficiency of management, etc. So these are not entered in the recorded in the books, but he cannot express in terms of only money. So only money means the 2 tables, 3 tables, chairs was purchased rupees 6,000 and 7,000. It's a monetary terms. Okay, so these are entered in the money measurement concept. Next one is a going concern concept. So third concept is a going concern. Third concept is going concern concept. Going concern concept. So this concept is only will continue its operate for the foreseeable future. Okay, future la irukkudiya and the concepts record பண்றது. So in the basic assumption the business is going concern will continue its operation for a foreseeable future. Foreseeable future. Future. So going concern concept influences accounting practices in relationship of value of assets and liabilities. Okay, so the valuation of assets and liabilities then depreciation of fixed assets, then treatment of outstanding, okay, then the prepaid expenses and accrued and unearned revenues, accrued and unearned revenues. Okay, so these are the foreseeable future. Then for example, assets are generally valued at historical cost. So any increases or decrease in the value of asset in the short period is ignored. Okay, any increased or decreased in the value of asset, any increase or decrease in the value of assets, in the short period. Okay, it's a going concern concept. Then fourth one is a cost concept. Fourth one is a cost concept. Cost concept. So an asset is recorded in the books of basis of historical cost. That is the acquisition of cost. Okay, acquisition of cost. So the cost of acquisition will be the base of or further accounting. That's all. So first in the books of basis of historical cost. Historical cost. Okay. So that is the acquisition of cost. So then acquisition of cost. Acquisition of cost. So the cost is further accounting. It does not mean that asset will always be shown at cost. So asset, asset value does not mean anything. Shown as a cost. Okay, Yama? Does not mean asset will be always be shown at cost. Shown at cost. So it is recorded at the cost of time of its purchase, but systematically reduced in the book value by charging depreciation. Okay. So systematica consider பண்ணும்போது systematically reduced in the systematically reduced in its book value by charging depreciation. Depreciation. Okay. So the cost concept of the following limitations. So there are 3 limitations are there. First limitation is, so the limitations, first limitation. So first limitation is the inflationary situation. In an inflationary situation. Inflationary situation. So it means when prices of commodities increase, the value asset of the historical cost may not represent the true position of the business. Okay, isn't it? When the price of commodities increases, so price of the commodities increase, the value of asset at a historical cost may not represent at the true position of the business. Adhoda true positions namalukku display பண்றது இல்ல. Okay, so it's an inflationary situation. Then second one is the results of business units established at different rates. So different rates are not comparable if assets are recorded on historical basis. So comparable if assets. Comparable if assets. Okay, that's all. Then third one is assets which do not have acquisition cost. So do not have acquisition cost, such as human resources are not recognized under this concept. So human resources are recognized pandradillama, human resources. Okay, that's all. There are 3 limitations. So next concept is a dual aspect concept. Okay, next concept is a dual aspect concept. Fifth one. Dual aspect concept. So according to this concept, every transactions or event has 2 aspects. So the open 2 aspects irukuma namakku. Okay, yeah. So 2 aspects. In the aspects are debit and credit. The aspects of debit and credit. There are 2 aspects. Okay. So first one is a debit, second one is a credit. Okay. For example, Arun started business with cash rupees 5 lakh. On one hand, the business gets cash of 5 lakh, and another hand, a liability arises. That is, a business has to pay Arun sum of rupees 5 lakh. So in this concept is a corresponding debit and credit. Okay, that's all. So from this concept arises the basic accounting equations. Basic accounting equation. So the dual aspect concept நமக்கு accounting equations கொடுக்குது. Okay. So accounting equations is equal to asset is equal to liabilities plus capital அப்படி எழுதலாம். அல்லது என்ன எழுதுவீங்க அப்படின்னா உங்க புக்ல கொடுத்த மாதிரி capital plus liabilities is equal to assets. Is equal to assets. இப்படியும் எழுதலாம். அல்லது assets is equal to capital plus liability. So it's a same thing, ma. Okay. So next concept is a periodicity concept. Okay. Next concept. Sixth concept is a periodicity concept. So this concept deals with preparing accounts for a particular period. So concept is preparing accounts for a particular period. As the preparators, investors, creditors, employees, and the governments are interested in knowledging the performance of the business unit periodically. So periodically concept means யாரெல்லாம் follow பண்ணுவாங்க அப்படின்னு பார்த்தோம் அப்படின்னா first one is preparators. That means sole proprietors சொல்லுவோம் இல்லையா? So preparators, then investors, then creditors, then employees and government. Okay, so these are interested in the knowledge of performance of the periodically. So interested the business unit periodically. Okay, that's all. So it becomes necessary to select a particular period, normally 1 year, for measuring performance. Okay, so hence the financial statement are prepared after every accounting period and not at the end of the life. That's all. So this concept helps the business in distribution of income to the owner and comparing and evaluating performance of different periods. So comparing, evaluating, then evaluating, and performance of different period. Okay, that's all. It's a periodicity concept. Then next concept is a matching concept. Okay, next concept is a matching concept. 6th, 7th one, ma. Matching concept. So this concept is revenues during the accounting period are matched with expenses. Okay, revenues and expenses வந்து match இருக்கணுமா. So incurring period to earn revenue during this period. Okay, so accounting period are matched. Accounting period are matched with expenses incurred during the period to earn the revenue. So revenue and expenses. That's all. So this concept is based on accrual concept and periodicity concept. So this concept is based on accrual concept and periodicity concept. So இந்த ரெண்டு கான்செப்ட் தான் நமக்கு பேஸ் பண்ணிருக்குமா. So the periodicity concept fixes the time frame for measuring performance and determining financial status. இது periodicity concept. Okay, so periodicity concept என்னது அப்படின்னா expenses relating to the accounting determining the financial status. Okay, determining financial statement. That's all. So all expenses paid during the paid are not considered, but only the expenses related to the accounting period are considered. The expenses only recorded. Okay, expenses மட்டும்தான் considered பண்ணுவாங்க. So expenses relating accounting period are considered. Period are considered. Okay, that's all. So on the basis of this concept, adjustments are made for outstanding and prepaid expenses and accrued and unearned revenues. So also due provisions are made, the depreciation of fixed asset, bad debts, etc. That's all. So நம்மளுக்கு adjustments அப்படிங்கும்போது நம்மளுக்கு என்னலாம் வந்துரும், adjustments அப்படிங்கும்போது accrued and unearned revenues வரும், prepaid, outstanding. Okay, so outstanding expenses நம்மளுக்கு வந்துரும். Then prepaid expenses ma, then accrued expenses vandrum, then unearned expenses also, revenues also that. Okay, so the provisions of depreciations அப்படினு பாக்கும்போது நமக்கு assetக்கு depreciation calculate பண்ணுவோம். Then bad debts வந்துரும். So இதெல்லாம் வரும். So relating to the accounting period, this is the match the revenue earned during the accounting period with the expenses incurred during that period to earn revenues before sharing any profit or loss. Okay, that's all. Then next concept is a realization concept. Next concept is realization. So eighth one. Next concept is a realization concept. So realization concept is any change in the value of an asset is to be recorded only the business realizes. So changes இருக்குது. Okay, so என்னென்ன changes அப்படின்னு பார்க்கும்போது நம்மளுக்கு the assets are recorded the historical value. Any change in the value on account only in the realizes. Realizes ஆன அந்த இதை வந்து என்ன செய்யறது, என்ட்ரி பண்றது. Okay, so value entry பண்றது தான் realization concept. So increase ஆகலாம், assetோட value decrease ஆகலாம். So இந்த values நம்ம என்ன செய்றோம், entry பண்றோம். So the realization concept, any change in the value of an asset. Value of an asset, that's all. Okay, it's to be recorded in the business realizes. So it's a realization concept. Next concept is a objective evidence concept. Objective evidence concept. So the objective evidence concept requires that all accounting transactions are recorded based on objective evidence. So எல்லா இதுமே என்னது, transactions எதுவும் எல்லாமே நமக்கு எந்த மாதிரி இருக்கும் அப்படின்னா only objective oriented இருக்கும். Evidence base பண்ணிருக்கும். So the transactions are recorded are recorded. Transactions are recorded. It's based on the objective evidence. That's all. Okay, so the objective evidence includes documentary evidence like receipts, invoice, etc. So it's a documentary evidence, ma. Documentary evidence la namakku enna vandrum appdi paathom appadina first வந்து receipts, invoice, இது எல்லாமே நமக்கு documentary evidenceல வந்துரும். ஓகேங்களா? Then cash documentary evidence. So it ensures authenticity, accuracy and reliability of transactions enter in the books of accounts. Okay, that's all. Next concept is accrual concept. So 10th concept, accrual. Accrual concept. So the accrual concept affects the transactions or recognized on mercantile basis. It's a mercantile basis. Mercantile basis when they occur and not when cash is paid or received. Okay, so and not cash is paid or received. It's an accrual concept. So revenues are recognized when earning, the expenses are recognized when they are incurred. So all expenses and revenues related to the accounting period are to be considered irrespective of the facts. So whether revenues and receipts are cash or not, whether expenses are paid in cash or not. For example, credit sales recognized as sale though the amount has not been received immediately. Okay. So accrued concept means நம்மளுக்கு வந்து cash immediate நம்ம வாங்கிருக்க மாட்டோம். Cash paid or received அப்படினு கொடுத்திருக்காங்க இல்லையா? cash நம்ம உடனே வாங்கிருக்க மாட்டோம். So கிரெடிட்டுக்கு பர்ச்சேஸ் பண்ணாலோ கிரெடிட்டுக்கு சேல் பண்ணாலோ நம்ம என்ன செஞ்சிருக்கோம்? உடனே cash கொடுத்திருக்க மாட்டாங்க. So rent for the month of March has not been paid and its accounting period is for 1/4/2017 to 31/3/2018. இதுக்குள்ள நம்ம என்ன செஞ்சுக்கலாம்? கொடுத்துக்கலாம். Okay, it still be recorded as the expenses of the accounting year 2017 to 18 because it had become due. So about 2017 to 18 ல நமக்கு இருந்துச்சு அப்படின்னா இந்த இயர்க்குள்ள நம்ம எப்பனாலும் என்ன செஞ்சுக்கலாம்? பே பண்ணிக்கலாம். ஓகேங்களா? So it's a due அப்படின்னு சொல்லுவோம். Due means என்ன சொல்லலாம்? நம்ம லேட்டரா கொடுக்கக்கூடிய ஒரு amount. That's all. It's an accrual concept. Then 11th concept is convention of consistency. Convention of consistency. Okay, convention of consistency. So என்னென்ன conventions and consistency இருக்கு அப்படின்னு பார்ப்போம். So the consistency conventions imply that accounting policies must be followed. So accounting policies follow பண்றது. Okay, accounting policies from one accounting period to another. One accounting period to another. Then the results of different years will be comparable when same accounting policies are followed from year to year. Same accounting policies எல்லாம follow பண்ணுவாங்க. Year to year same accounting policies. So same accounting policies are followed. Okay. So for example, if a firm followed straight line method of charging depreciation, since its purchase or constructions, the which should be followed without any change. So straight line method yearly years same amount. If 4,000 depreciation means Yearly year நம்மளுக்கு என்னதான் வந்திருக்கும்? First year 4,000, second year 4,000, then third year 4,000. So yearly year நம்மளுக்கு 4,000 rupees வரும். இதுல எந்த ஒரு without any change. So however, it does not mean the changes are not processed. So change in accounting policy can be incorporated. So first one, to comply with the provision of law. First one is a provision of law. Then second one is accounting standards issued. Accounting standards issued. Okay. Then third one is reflect true and fair view. Reflect true and fair view of state of affairs. Okay, that's all. So these three are the accounting policy can be improved. Then next one is 12th one. So 12th one is a convention of full disclosure. Convention of full disclosure. Okay. So convention of full disclosure na enna appadina is must to be prepared honestly and all material information should disclosed in the accounting standards. So prepared honestly and all material information should disclosed in the accounting standard. So disclosed in the accounting standards. Okay, Amma? So this is the important. So because the management is different from owners, is most of the organization manages and differ from owner. So the disclosure should be full, fair and adequate so that users of financial statements can make correct assessment and about the financial position and performance of the business units. Okay. So these are the convention of full disclosure. Then 13th one, convention of materiality. Okay. So the accounting concepts. So the accounting concepts, the financial statement should disclose all material items which might influence the decisions of users of financial statements. So idhula nama pakkumbodhu honestly and all material information, but idhula vandu enadhu financial statement disclose all materials. So disclose all material. Disclose all material items which might influence the decisions. Okay, influence the decisions of the users of financial statements. So hence any item which is significant and is not relevant to the users need to be disclosed in the financial statements. So not relevant to the users and not disclosed in financial statement. Financial statement. That's all. The principle is basically an exception of full disclosure principles that are material subjective in nature. Then materiality depends on the amount involved in the transactions. Okay, that's all. Then 14th one is a convention of conservatism or prudence. Convention of conservatism or prudence. Okay. So it's a policy of caution of playing safe. So it's a meaning is policy of caution or playing safe. Safe. Okay. So while recorded in the business transactions, one has to anticipate no income, but provide for all possible losses. Okay. No income irukaduma, but losses ku nariya possible irukum. So all possible losses. So for example, the closing stock in a factory is valued at rupees 35,000. The cost price and 25,000 is reliable cost, but while recording in the books of value 25,000. So considered being the lower of the two. So in the 35,000 இருக்கும்போது நம்ம எவ்வளவு தான் நம்ம எழுதுவோம் 25,000 தான் நம்ம என்ட்ரி பண்ணுவோம். ஓகேயா? So consider பண்ணும்போது நமக்கு என்னதான் இருக்கு lower amount தான். So lower of the 2 இருக்கு. Okay, that's all. So the realization concept, any increases value is not accounting unless it has materialized. So the convertism convention puts further restrictions, any unrealized gain not to be anticipated, but provision can be made against all possible losses. So all possible losses are the okay, that's all. So these are the concept of accounting standard. Okay. Okay. There are 14 marks. So next class we will see the standard accounting standards. Okay. Thank you, students. Thank you so much.